Okay, let's dive right in. Look, the brutal reality facing cycle peak buyers right now is, well, it's pretty rough. We're looking at a market that is quite literally testing the absolute limits of investor patience. Welcome back to Cal Crypto. Today, we're going to break down the conflicting on-chain data to try and answer the most hotly debated question in the space right now. Is the 2026 bear market bottom actually in? We've got a fierce debate lined up for you today. Flashing bullish signals going head-to-head with a very stubborn bearish reality. And we're letting the data do all the talking.
To really understand where we're at, we have to look at the pain. According to Cointelegraph, buyers who stacked Bitcoin between July 2024 and July 2025 saw prices run all the way up to $107,000. And now? Yeah, the vast majority of that allocation is underwater. But here's the fascinating part, kind of the whole crux of the bull argument. You contrast the severe financial pain of that $107,000 buyer cohort against historical patterns, and you see that this exact kind of pain, this specific capitulation, almost always precedes every major cycle bottom.
So that brings us to the trillion-dollar question that's probably on your mind. Are we there yet? Is the bear market bottom in? The stakes are incredibly high right now. On one side, historical metrics are flashing bright green. But on the other, institutional demand seems to be on a prolonged vacation. I want to make it absolutely clear up front. We cannot officially confirm a bottom just yet. But what we can do is weigh both sides of this data debate so you know exactly what metrics to watch going forward. Section 1. The bull case. Flashing signals. Historical patterns say yes.
Okay, so if you're an optimist, the historical patterns on the blockchain right now are telling a really compelling story. According to a report by Cointelegraph, one of the most reliable indicators of a bottom is the behavior of people who bought 1 to 2 years ago. CryptoVisart, a lead analyst at Glassnode, noted that they watched the realized loss volume of this specific group closely. Why? Because historically, bear markets just don't find a durable footing until this specific cohort of 1 to 2 year holders completely exhaust their selling pressure.
And this brings us to exactly what we're seeing today. Cointelegraph points out that the 30-day moving average of realized losses for this 1 to 2 year holder group recently spiked past $75 million on a rolling basis. But then, and this is absolutely critical, it began to reverse and cool off. Cointelegraph flags this rollover as a classic signal, one of the clearest early signs that the heaviest distribution phase is finally behind us.
We're also seeing a massive shift in network profitability. Check this out. CoinDesk reports that we've reached a critical crossover point where supply and loss has officially overtaken supply and profit for the very first time in this current cycle. We currently have 10.5 million Bitcoin sitting underwater compared to just 9.8 million Bitcoin held in profit. That means more than half the circulating supply is currently in the red.
So why exactly is that a bull signal? Well, CoinDesk reports that this exact crossover condition, where lost coins officially outnumber profitable ones, has historically coincided with the major bear market bottoms of 2015, 2019, the COVID-driven capitulation in 2020, and the 2022 bear market. It's basically a hallmark of deep value territory. Adding to that deep value thesis, CoinDesk also highlights the massive significance of the 200-week moving average. Bitcoin's price recently touched this level at roughly $61,300. This is a huge long-term trend indicator, and as CoinDesk points out, it has acted as major support in every single previous bear market cycle. So, if you're looking purely at these historical signals, the bottom looks like a done deal, right?
Section 2. The bear case rebuttal. The stubborn reality.
Well, hold on a second. Let's execute a hard pivot here, because the data isn't one-sided, and we need to look at the stubborn reality that's keeping this market weighed down. KuCoin News offers a direct counterpoint to all that bullish momentum we just talked about. Their analysis explicitly states that despite all these deep value signals, conventional on-chain data shows the bottom is definitively not confirmed. The convergence across holder behavior and institutional flows, it's simply missing right now.
Let's look at who is actually doing the selling. Usually, long-term holders anchor the market floors, but KuCoin reports an alarming reality. Long-term holders are currently the ones driving the capitulation. Their share of total loss-taking climbed from just 15% in early February all the way up to 43% this month. The old hands are the ones dumping. Actually, scratch that. It's more like they're aggressively leading the capitulation, which KuCoin accurately calls a blinking yellow light.
And who's supposed to be stepping in to buy up that supply? The institutions, right? But they aren't. KuCoin reports on the open risks of continuing spot ETF outflows, which are still draining around $88.9 million per day from the market. Institutional conviction just isn't there at the moment.
KuCoin actually summarizes this tension perfectly.
noting the gap between deep on-chain value and institutional behavior is not unprecedented, but it is stubborn. To emphasize just how stubborn, KuCoin points out that daily ETF turnover has essentially collapsed. It's currently 80% below the volumes we saw back in October 2025. The demand has just vanished.
Section 3. The Confirmation Checklist. Glassnode's 3 required conditions.
So, the crucial point here is, how do we actually resolve this debate? How will we know when the bottom is really in? Well, for that, we turn to the gold standard of on-chain data. KuCoin News, citing Glassnode's framework, lays out an explicit 3-point checklist required to turn this theoretical deep value into an actual confirmed bottom. And currently, all 3 of these conditions share the exact same status: unmet.
Let's break down each checklist item clearly so you know exactly what to watch. Condition 1, long-term holder selling pressure absolutely must cool down. That churn of supply from old hands to new hands has to subside. Condition 2, ETF flows must shift from draining capital to at least neutral or ideally positive, with trading volumes showing real signs of life again. And Condition 3, Bitcoin must reclaim the short-term holder cost basis.
Let's put some exact numbers on that third condition. KuCoin and the Crypto Basics specify the exact price levels that Bitcoin must reclaim to validate a true recovery. Target 1 is the short-term holder cost basis, sitting at $72,200. Target 2 is the true market mean, at $76,600. Until Bitcoin breaks above these specific levels, the market remains in a state where most active participants are underwater.
Section 4. Signal versus confirmation. The unresolved tension. As we bring this all together, look at what we've got. We have incredibly powerful historical signals telling us we're in the bottoming zone, but they're clashing violently with a total lack of institutional confirmation. We really can't declare a winner here today. But I want to reiterate a powerful quote from KuCoin, because it is literally the most important takeaway from this entire explainer. Price and value are not the same thing in crypto markets. Just because the network is heavily discounted doesn't mean the price is going to magically go up tomorrow. Deep discounts can persist for a very long time when institutional appetite is absent and long-term holders keep distributing.
Quick pause here. I need to deliver a brief, clear disclaimer. This explainer is strictly an impartial analysis of on-chain data provided by our sources. It is absolutely not financial advice. Please do your own research out there. Which leaves us with the ultimate unresolved tension. The market is basically sitting in a waiting room, and the door hasn't opened yet. So I'll leave you with this question to chew on. Will long-term holders finally exhaust their selling and give us that historical bottom? Or will ETF traders continue to step away, dragging this bear market out even further? Keep your eyes locked on those 3 Glassnode conditions.
Before we wrap up, transparency is everything to us here at KuCoin. Every exact number, date, and historical claim used in today's debate is fully sourced directly from Cointelegraph, CoinDesk, the Crypto Basic, and KuCoin News. They're all listed right here on the screen, so you can pause and double-check the data for yourself. Thanks for joining me for this deep dive, and I'll catch you on the next one.